cash versus accrual accounting. All homeowner associations will use one of these methods to record income and expenses. We will also briefly cover an important report called the fund income statement. As you may know, HOA Assist provides monthly financial services to associations around the country. Our clients are given a choice whether they prefer the method of cash or accrual accounting. Cash basis accounting records revenue and expenses when the cash changes hands, regardless of what time period the income or expense relates. This method is straightforward and reflects more often than not the way that someone would handle their own personal income and expenses. Associations may elect to choose this option to simplify how their financials are recorded, making it easier to understand. However, the argument is that cash basis accounting is less accurate and does not outline future financial projections. In comparison, the accrual basis accounting records revenue and expenses in the period that the time relates to, regardless of when the cash changes hands. This is referred to as the matching principle. Although cash basis is an available option, the accrual method is accepted by generally accepted accounting principles, or in other words, rules from the Financial Accounting Standards Board, which is why this method is used by the vast majority of our clients and recommended by our accounting department. Accrual accounting has a reputation of being more accurate and lends to the association who must anticipate future costs and determine if dues need to increase or a special assessment is required. So let's move on to fund income statements, shall we? When looking at the operating fund income statement, you will see association fees listed. As you can imagine, this represents dues billed to homeowners. Note that this is not the amount collected, but rather the amount billed. If you are using the accrual method, uncollected billed amounts are in the accounts receivable balance on the balance sheet, while amounts paid ahead of time are included in the prepaid association fees balance. If you see operating interest income, that represents the interest earned on operating cash balance. Note that total income is equivalent to gross pay on a person's paycheck. As we look at expenses within the operating fund income statement, you could see items such as administrative expenses, which could be your audit, legal expenses, postage, maintenance expenses, which is often the largest category for an HOA, includes things such as building repairs, lawn, snow care, payroll expenses if the HOA has on-site employees, and utility expenses such as water, electric, gas. Additional expenses usually include the association's insurance policy and other expenses such as monthly reserve contribution determined by the board. For example, total expenses is the equivalent of deductions to an individual's paycheck for items such as payroll tax, health insurance premiums, and 401k contributions. Meanwhile, net income equals total income less total expenses and is the equivalent of the net pay on an individual's paycheck. Fund income statements can be very useful, and it provides more detail than a balance sheet. Both the fund income statement for operating and reserves along with the balance sheet is provided as standard documentation when a homeowner orders a resale disclosure in the process of selling their home, giving a buyer insight on the association's financial standing. We urge every HOA to have trained professionals to oversee their financials to ensure the board, homeowners, and future buyers have documentation that is clear and accurate. If your HOA needs comprehensive monthly financials, or you just want to learn more about HOA Assist, please call or email us today. Make sure to subscribe to our YouTube channel as more content is coming, and we want to make sure that you're the first to see it. We sincerely appreciate you taking the time to watch this video, and we'll see you next time.